I'll explain the confusing part. Why do I have two jobs? I'm currently in the midst of transitioning from the Ethereum Foundation to Etherealize. I'll explain what Etherealize is later. TLDR, think Red Hat for Ethereum. I was assigned this topic like 2 or 3 days ago. I wasn't ready to pull together the whole Ethereum roadmap, so I thought I'd make this a little bit different. We're going to take a bit of a mini journey through the past. So where have we been in Ethereum? I'll talk a little bit about where I think we are today, and then maybe a sneak preview on where I think we're going. These are just my opinions. I don't speak on behalf of the EF or Etherealize. I put that disclaimer so I can say whatever I want. So, I'm going to speed through this initial part. I'm a bit of an oddball at the EF. We don't actually have that many TradFi people. I might be the only one. And most of the foundation, it's either academics, computer scientists, so I am about as strange and as corporate as they come at the EF. I had a lot of fun putting together this slide. This was a bit of like a reflection on how my life has changed. It's still the same stuff though. So, a little detour through the past. Zooming out, I think it's very easy to get caught up in the day-to-day of crypto, but if you zoom out and look at maybe the past decade, there's really only been 3 breakthroughs or moments that have mattered. The first one was Bitcoin. We invented money, and it was magical, and it was on the internet. This is money you can self-custody, you can move, no one can stop you, theoretically. You can't do anything with it. Next, we invented smart contracts. Now you can do things with the money. The third one, I'm going to call it prog crypto. It's a shorthand, I think 0xPark, or maybe Vitalik came up with it. It stands for programmable cryptography. And this encapsulates things like MPC, FHE, ZK. Just think fancy math lets you do things with data that you couldn't normally otherwise do. So these are the primitives. The primitives let you do things with them. These are the things you can do with these 3 breakthroughs. The first one, I'll call it digital bearer assets. This is a fancy term. Some people might call it store of value. Some people might call it commodity money. Some people just call it money. But there's 3 main things you can do with them. One is you move them. Second, you do nothing with them. You just hold them. Third, I'm going to call it record, because I couldn't think of a better word for it, but the word that should come to mind is ledger. It is money, you can use it to keep track of things. Smart contracts, they let you do a lot more. These are the known use cases that I think we found. Unclear if they're going to last, but I'm pretty confident a couple of them will last. You're familiar with most of these actions, right? So trading, think Uniswap. Borrow, lend, think Maker, think Aave, Compound. The next one, I couldn't find a great word for this. I guess it's predict, but think Polymarket. It lets you bet on things Trump is going to do, basically. The next one, I'll call it identify. So the things that should come to mind here would be decentralized identities or DIDs. There's a bunch of interesting projects doing, Quark ID is the one that comes to mind. They're doing some cool stuff in Argentina and Mexico. It's all ZK, it's moon math magic. I have no idea how it works, but it works. Authenticate and authorize. Basically this is saying, who are you, and then can you do the thing with the money or the action? So first we started with money, then money grew into something useful, we call that finance, and then to access finance, we kind of need to know, or it's helpful to know who you are if you want to access certain systems where you can't just let everyone in. So we'll call that identity. The last one, again, prog crypto. I'm going to call this magic because I'm not a cryptographer, I'm not a mathematician, and frankly, most engineers I speak to also have no idea how this stuff works. They just assume the library and the math is correct. And there's a couple confusing things you can do with it. These verbs are very confusing. I'm not going to explain any of them, but just think ZK, MPC, and FHE. You can prove things about data. You can compress data. You can conceal it. You can secure it. So for security, it might be things like MPC or a whole host of three-letter acronyms. So moving on. So where did this, what was the point of all of this? And what was the genesis? It was these two papers. The first one came out in 2008. You've probably read it, and if you haven't read it, you've probably read the ChatGPT version of it. This was Satoshi's paper, Peer-to-Peer Digital Cash. The second one came out half a decade later. Vitalik wrote this, I think he was 18 when he wrote this, and he presented it at Miami. This was basically Bitcoin, but programmable. And we called it smart contracts back then. So money, and then things to do with that money. And the promise of these two papers, it was very big at the time. They made very grandiose statements. The first one made the statement of, we can replace money around the world. The second one made the statement of, we can replace all applications in the world with this new system. And so this was many years ago, right? The first one was almost 2 decades ago. The second one, almost exactly a decade ago. And so let's do a check-in on how far we've gone. So this is a meme that a friend at an MEV project sent me. He's unfortunately, he has to do product management at an MEV project, which often means you kind of just guess. You just guess at things that might make money. That's a lot of MEV. And he sent me this meme, and he was particularly fed up that day. And he was like, you know, Eric, my day often feels like a Monte Carlo simulation. We have no idea what product market fit is, so let's just throw random things at the wall. And so a lot of crypto actually resembles this, which is not a knock against it. We should be experimenting. But often the experimentation it'll look a little silly, especially for your friends who are not in the industry. They'll feel like, what are you guys doing over there? And so here's a little walk down memory lane of some things that either did not work, in the case of DeFi 2.0, that was decidedly not a good idea. Some other things that maybe haven't had their moment yet. Gaming is one that comes to mind. Reddit absolutely hates crypto gaming. And honestly, so does most of the gaming industry. Prediction markets were basically a nothing until the US elections last year. Identity and auth is good in theory. There has been no breakout application, and more importantly, there's been no breakout application that makes money. Until someone bundles it. Maybe one of you guys can do that. But that said, there's a lot of things that have worked, right? And so I'm going to show you a lot of charts that go up and to the right. You don't have to actually read any of these charts. Just know this is DeFi, and it's all up and to the right. So one chart is stablecoin supply. That's the one everyone loves pointing to. The one next to it, I think also from Artemis, that's borrow lend volume. And so you'll see Aave in there. I think Aave's the purple one. And then there's compound. And then there's TVL on the bottom left. And then there's DEX volume. And then that other chart that looks a little different, that's just Google trend data. So clearly something is working, right? DeFi seems to be working. And according to Google, some people are paying attention. I just did Ethereum. But if you looked at Bitcoin or crypto, it'd be the same. But what this doesn't show you is, this just shows you the absolute number, right? It does not show you what the relevant denominator is, which is to say, let's take the stablecoin one. What number is that? It's a little over 200 billion USD. That's in stablecoin supply. What that doesn't tell you is what are you comparing that against, right? Like it's been 10 years, how far have we actually gone? Which is why I say don't celebrate yet. And so I'm going to show you some numbers that should depending on how you view it, is either cause for extreme sadness and giving up, or it should be a call to action that there's a lot more work left to do. So remember, this is what we promised to the entire world. We were going to replace cash and digital money. We were going to replace all applications with on-chain applications. So keep that promise in mind. We made this promise 2 decades ago. This is how far we have come on stablecoins. So we are roughly 1% penetrated. What is the denominator? It's tough to figure out the exact comparison for stablecoins, but the closest thing you might be able to find, it's this arcane metric called M2. This is M2 money supply. What that comprises is cash, so paper cash, plus all the coins in circulation, like physical metal coins, plus bank deposits. So whatever you have in your savings account, a certificate deposit, or money market fund. But basically, think of this is the stuff that Tether is supposed to hold in their treasury, supposedly, and this is what Circle holds in their treasury. This is the thing that backs the stablecoin. Total stablecoin supply is 200 billion. Total M2 is 20 trillion. So it's been 10 years, we've gotten to 1%. The numbers get lower from here. DEX volume. This is when you open up your MetaMask or your Phantom and you ape into the thing. We are a tenth of 1% of all, I'll call it relevant assets. You can make this number even lower if you start adding weird stuff like real estate or wine or fine art or warships. You can trade all that. We are 0.1% of public equities, public debt, which is government debt, private debt, which is corporate bonds, and commodities, so oil futures, orange juice futures, bacon futures. And they get even lower. So this is on-chain borrow volume. So if you summed up Aave and Compound and Morpho and the Solana forks of these things, you get to this number. It's that number, whatever it is, I don't remember it, over total secured debt. And this is debt that is backed by collateral, mortgages, whatnot. We are a drop in the bucket. So we've come a long way, right? Like, this is cause for some celebration. We have a lot left to go. So this is 100x, this is 1000x. Someone else has to do this math. It's more than 1000x. Which is why I say, if you want to build, this is your opportunity. If you want to celebrate, this is not cause for celebration. So this is one of my favorite memes. This is from Mad Men. The bottom is TradFi, and that's Don Draper. He does not think about DeFi. And often when you talk to banks, and you come in and your Uniswap or your Aave, and you're like, look at all my TVL and look at all my trading volume, they will frequently say, we do that in 1 hour. This doesn't matter. You can leave my office now. And so the other way to show it, this might be an unfair comparison. I just did Google Trends again. This is the search trends for bank, Ethereum, crypto, and Bitcoin. And at no point in history have any of these terms overtaken the word bank. Bank is a normal noun. These others are proper nouns. We want to become an actual noun. So why has this taken so long, right? Like, it's been 2 decades nearly. Why are these numbers not higher, right? Because it makes a lot of sense to us that this is clearly a better system. If you ever try to send an international wire or process a check at your local bank branch, it is awful. It is an awful experience. So why has the entire world not moved to this? I'm going to give you some answers that you won't typically hear on the podcast circuits. It's not scalability, it's not due to privacy, it's not due even to things like custody or wallet experience. It's actually something, there's some more fundamental things. So the first one, I call it professional services, but think in normal tech. You typically will have systems integrators. They'll go in, they'll deliver you the entire solution, they will hold your hand and ship the whole thing. We don't currently have this developed in crypto yet. And so if you think the central bank of the US is going to look at your GitHub repo and just fork it and just do the thing, or download MetaMask or Rabby and start trading the entire balance sheet of the US on Ethereum mainnet, you may need a reality check. They need a lot of help to do these. The second one, I'll call it navel gazing, but I think what is ironic is a lot of conferences like this are often very navel gazing. It is crypto people talking to crypto people. I realize the irony of me doing this at you, but we should make an effort to not do this, or do less of it. The third one, ETH Denver comes to mind for the third one. And I don't know if you've ever seen the Doge Lamborghini that's typically parked outside of the main ETH Denver venue. But for every one of those, I'll estimate we lose 100 users permanently. We should also do less of that. It's most of you here, I assume, are builders or devs or engineers. I'm sure you don't like being associated with the cringe side of the industry. I would suspect that's actually not a majority of the industry. It's just they get the headlines, and when we all go home and talk about our jobs, frequently this is the topic that comes up. It is the cringe factor. They don't care about your open PRs. They care about what they saw on MSNBC. The last one's just time, right? It's going to take the world's comfort to get used to these ideas that are very normal to us. No one knows what censorship resistance means. It's a confusing term. No one knows what decentralized means. That's also a confusing term. So we need to get them up the education curve. We need to stop being a little less cringe, please. We need to reach out, and we need to actually ship the product and actually hold their hand and show them this is how you do it, and integrate with legacy systems. This is not the sexy work. This won't get you a VC check, but it might get you revenue, which is something we probably need as an industry. So far, we've covered where we were. This is where we are now, but I didn't want to end on this. I think things are looking up. So we'll get into the actual topic, which is what is coming up next. So one big, this won't hold for every ecosystem. This is generally an approach taken by ecosystems like Ethereum or Bitcoin and Celestia. But generally, I'll call this the trend of small boxes watching very big boxes. And you see this phenomenon all over the place. This is actually the entire L1, L2 architecture. You have a very big server, which is the L2 sequencer, and the L2 nodes. You have many, many L1 nodes and validators. They all enforce and watch that big box in the middle. You see this in MEV. This is how PBS works. You see this with provers and verifiers. Provers are typically GPU farms. Verifiers are the laptops you have in front of you. We have collapsed on this as most likely the correct way to scale a system like this. And tomorrow, you can extrapolate that. What is the small box? The small box is Ethereum. And the big box are things that happen in the real world. So if we do our job right, it might be finance, it might be elections, and it might be actual events. So this will be things like Polymarket. These are things that I didn't want to make slides for at 3 a.m., but these also matter. You can ask me about them. You probably know what some of them are. And so these are probably the highlights of what's coming next for Ethereum from a technical standpoint. You'll see these on all the various Vitalik roadmaps. They'll touch on some or all of these. Here's a part I want to get to that you won't typically find in an EF talk, but I think it matters just as much, if not more. The left-hand side I'll call maybe a business model shift. This is what I would like to see. I don't know if it will happen. I hope it does. But we need folks that can actually deliver and integrate these systems. So in trad tech, you'll have firms, well, McKinsey probably shouldn't be on there. They just make really nice slides. But you'll have firms like DXC, Accenture, Cognizant, and Palantir. They don't just sell SaaS, they sell you the whole thing. They will show you how to install these systems, maintain it, they'll show you what you can do with it, and they will customize it. And we need the exact equivalents for crypto. Consensus has been doing this for a very long time. They've pushed Ethereum very far, and we need more efforts doing this. Second, it feels ironic saying this at Token Dubai, but we need smarter capital markets. A lot of the issue with crypto is we don't have smart capital markets, and so we have misinformed capital chasing misinformed business models, and it all you can trace things upstream and ask the question, who's the one that keeps these funds in line? It is the people that fund them, the LPs, and so we actually just need to get smarter across the board. Okay, we'll stop here. I put up some questions that I thought I didn't cover at all in this. You can ask me what's on here. You can ask me anything you want. There's my contact. So,
do we have any questions in the room? Anybody want to ask a question to Eric about the Ethereum Foundation, about the future, about Linear and Jira, anything?
Ask me about Linear.
Here, use the mic.
About Etherealize, can you tell us a bit?
Yeah. So I think the way I would explain Etherealize, think Red Hat for Ethereum, or something more like Palantir for Ethereum. So delivering some version of Ethereum that's actually usable for institutions, governments, TradFi.
Yeah, so I was also a coder. I coded on Ethereum like 8 years ago. Start with very previous Solidity. So nowadays I saw, onboard institution is very important, just like you said. So what will, compared to Solana and Sui, we see a lot of them, they are trying to get the clients, get the government, get the enterprise. So what do you think about Ethereum next step? I know there's Ethereum Enterprise, Aliens or something. They have some consortium stuffs. So for the next competitions, what do you think about how Ethereum can win with the onboard institution, like the mass adoption or something?
Oh, got it. So the question was on the competition for enterprise amongst different blockchains.
Yeah.
I think so. It's an interesting thing. I think if you pay attention to the typical crypto info flows like Twitter or the Block or Blockworks or podcasts, you will get the impression that it's actually very competitive for that stuff. When you go into the field and you talk to these institutions, it's actually deeply uncompetitive. As in, let's say you're the government of this country, or you're a government of any country, or you are a large US investment bank. And then your CISO is like, hey, crypto person in my firm, find me 3 blockchain ecosystems that we can evaluate. In every single scenario that I found, Ethereum is always one of the 3, and then the other 2 is kind of a grab bag, right? Sometimes it's Ripple, sometimes it's Ava Labs, sometimes it's Hedera Hashgraph. I don't know what that is, but I've heard that one before. And then some random L1 you've never heard of. Ethereum is always there. The issue historically has been, while a lot of these other ecosystems at their foundation, they'll typically have a BD-ish. They won't call them BD, but they're essentially BD. There's usually someone to call, right? Historically, there's been no one to call at the EF, and so Ethereum's just there, but there's no one to deliver the solution. And so maybe the way to tie that together is the opportunity has been there, no one has picked it up. And so I would say it's actually very uncompetitive, but I think if Ethereum doesn't do anything, you lose the advantage. And the advantage is very, very large right now. Like mindshare wise, there is nothing else that comes close in terms of decentralized apps. Right? Like if any other chain comes up, it's always in the context of why wouldn't we use Ethereum? Just from my conversations.
Any other questions? Anybody? Well, if you're not going to raise your hand for a question, can you put your hands together for Eric Swee from... Oh, wait, we got someone. Bro. You faked me out over here.
Hi, Eric. Thank you so much. Amazing presentation. Maybe a bit late here, but I missed how Palantir working with Ethereum for better financial markets. Can you please clarify? Thanks.
Oh, sorry, to clarify, what was the question?
How Palantir connected with
yes.
all of them and goes with consensus and Ethereum for better or smarter capital markets.
Yeah,
thanks.
Yeah. So the thing I was trying to, so the topic of the talk was what's the future of Ethereum? I think typically these talks will focus on things like scalability or where the roadmap is going. You will rarely get people, I think, that attempt to lay out where they think the industry is going. Like in terms of what are actually the missing parts of the supply chain in Ethereum that we need now, right? And typically, at least for enterprise tech, for SaaS or cloud or IaaS, any of these things, you will have pure technology vendors. They just build the software. They hope someone buys it. They might even sell it to you. You have hybrid firms that do that and then also build and customize it for you. And some of those are the ones here. You're probably familiar with some of them. And then there's some that look more like classical consulting firms. So what they will do is they will tell you, like let's say you're the CISO and you're like, hey, I need an ERP. You'll probably call up one of these firms and they will explain these are the 5 things you should choose. These are the criteria you want. We think you should choose this. And by the way, we will implement it for you. So the analogy I was trying to draw is we don't really have an entire industry of those in crypto. And it is not as simple as opening up L2Beat or Etherscan and downloading a wallet and trying to on-ramp. Like this is not how enterprises operate. They need someone to call, they need someone to yell at, they need someone to ask and guarantee SLAs. They need a DevOps person who's up 24/7, poor DevOps. Like you actually need to service these systems, and you typically will see this in open source. Red Hat was probably the most famous example. There's many, many others, but this is a class that we haven't really found yet in crypto. My theory is because we've been very R&D focused and probably purely product focused. But we actually, when you deploy these systems at scale, like think if you wanted to replace the voting system of a country, you can't just fork a GitHub repo and deploy into an S3 bucket. You actually, you need to service these things and to customize them. And so I think, my hope is that that class of actors will be filled by any number of folks. Consensus has been doing this for a very long time. Gateway.fm, they do great work. They recently did a thing with Microsoft, and apparently they did very well. Lambda is Lambda class. They do a ton of excellent work. Etherealize, out of the 4, is definitely the new kid on the block. We are specifically doing this, but for US TradFi. So we're building systems for brokerage desks, large hedge funds, all using public Ethereum. Smarter capital markets. The point I was just making is markets in crypto are not very smart. You can just open the top 10 list and you can see what I mean. There's things that shouldn't belong there. And you might ask the question, why are they dumb? And the answer, it's a multifaceted answer, but the cleanest answer is to figure out, well, how smart are the people that are giving them money? And I would reckon They're not as smart as their TradFi equivalents. So we just need an upgrade across the board. This is my opinion.
All right, anyone else? Going once, twice? Put your hands together for Eric Swee. Thank you for coming out.